Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So the S&P 500 has bounced off of support and has recovered the gains that it lost during this small correction. So that does reduce the chances of the second and third targets that we had aligned for this trade of being hit. But we did hit the first target for a nice considerable profit for a quick gain that actually retraced, I think, around a full month, so 34 days of trading of gains in around a week. So we made considerable gains in a very short amount of time, and that's why I love shorting the markets, simply because the gains that you can make in a short amount of time are considerably larger than any gains you can make to the upside, unless again it's after a big drop like we had in the end of 2018. Right here we had a V-shaped recovery where there you could have made a lot of profit in a very short amount of time. Now, if you watched my last video, I did mention I was looking for a re-entry to short at this 3290 level right here. But we pretty much blew past it. I was looking for a sign of a rejection off of the resistance level, which would have potentially offered a shorting opportunity to continue the trade down. But of course, that does not apply if the level is broken straight away, which is exactly what happened. So right now things are looking pretty bullish for the S&P 500. Here on the chart, this is the close yesterday. We closed right at the all-time highs, but I'm positive that the futures are currently trending above this, so we are currently making new all-time highs. So again, quite bullish. And that brings me on to my next point, which is what I talked about briefly in my last videos, and that is the fact that my targets that I align are also investment opportunities if you are long on the S&P 500. Now, that is something that has changed recently on this channel. For the past 3-4 months, there have been bearish indicators indicating potential downside in the markets, indicating a potential stock market crash, and definitely a slowdown in the S&P 500 gains that we were to see. Now, these indicators, such as the RSI divergence and the MACD divergence on the weekly chart that I've been talking about for a while, are starting to slowly get burnt through, in part because of this rally. And so that really chips away at the bearish case, at least in the intermediate term. So essentially, we are switching from a swing trading dynamic like we were during the entire 2019 here, where we had swings up and down. Even from before in 2018, we had a similar type of price action. Now we are back to the classic grinding up of the S&P 500 with little to no correction, and that is more of a investment strategy, a dynamic of investment, and getting watching out for these small corrections to get cheaper prices to build your position to invest in the S&P 500 in the longer term. Now, of course, we will continue to see opportunities like this, these wedges on the S&P 500 form all the time, and they will continue to offer shorting opportunities for quick gains like we saw right here. But essentially, if you're looking for a longer term perspective of the S&P 500, it's really difficult to say right now that we're going to see more downside. There is definitely more long-term downside underway at some point in the future. That is obviously nothing unexpected, but in the intermediate term, we are definitely seeing some bullish signs, such as this bounce off of the trend line. This is definitely a valid trend line going back to this 2018 low here. We've got a few reactions and another bounce. So again, this target of mine was definitely a great opportunity to take to invest into the S&P 500. Now, when doing so, when investing into it, you can really apply the exact same rules you are when trading, swing trading up and down in the shorter term, and that is using stops. And I am a strong advocate of using stop losses even when preparing long-term positions, because you can really use these to have very limited downside and pretty much unlimited upside in the long term. So this was the stop loss I had in mind to invest in the S&P 500 here at this target. And now you can actually raise that stop to here, the top of the gap. You can see there's a small gap here. So if prices start going back down below this stop loss level, below this red line, we're likely to see more downside. And that brings me on to my last point, and that is the fact that we still need to watch out for these bearish trade setups, just because of, and that brings me on to my last point, which is the fact that we still need to watch out for these bearish trade setups with these nice little wedge patterns, because these will definitely in the near future, offer more opportunities to invest in the S&P 500 at cheaper prices, and also hedge your position. So if you've got a longer term position in the S&P 500, that you don't move around as much, all while having short term short positions, this will strongly hedge your portfolio. So in the case where things do start to go down, you will be ready for potentially more downside in the markets. Now, from what I see on the charts, I actually see a back test of this wedge pattern right here. You can see that's a typical breakdown of the wedge, a bounce, a back test of the wedge, and a potential come back down to break the longer term trend line. So that, again, these are the kind of things that they may not happen. It's definitely not a 90% chance that this scenario will play out, but if it does, in the case that it does, it can give you nice profits, and you will be more ready than someone who just has a blind long-term position in the S&P 500. Before we finish the video, I'm going to quickly take a look at the hourly chart and discuss what we'll potentially see in the next few days. So this is the hourly chart. As you can see, we have the uptrend line that we were looking at for the past few weeks, with a contraction line forming a nice wedge pattern. We did end up breaking the uptrend line along with the price support level, so that was the nice sell signal here. Gap down, hit the support level, but at the same time we made some divergence here. You can see the S&P 500 is making a lower low, while the MACD and the RSI are both making a higher low. So that's a bullish signal right here, especially coming at support. This is where you could have invested again into your long-term position on the S&P 500. Again, I mentioned this in my last video. I was expecting a bounce to this resistance level, but wasn't sure whether we would blow past it like we did, or reverse for more downside. That, again, is the kind of thing you don't always know. in your trading, and you have to see how the price behaves. And before the close yesterday, I mean the day before yesterday, we did close right above this resistance, well, this support level. So that did increase the probability of a bounce to higher all-time highs again. So that's about all I wanted to cover on this video. I hope it was something a little bit new to this channel. If you enjoyed, make sure to like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.